Hello and welcome. This is Neil Borate. I am editor personal finance at Mint, and today is a very special occasion. It is Teachers' Day, and with me are two of the industry's greatest teachers. So Swarup Mohanty, CEO and Vice Chairman at Mirae Asset Mutual Fund, and of course Dr Rachana Baid, who's Dean at NISM. And today we are gathered to unveil our compilation of mutual fund articles that you've written, because we often get a series of requests from people that can you please have it all in one place. So we've covered both the deep questions about how many funds to have, how to pick funds, and the important but procedural questions about how to get all your mutual funds in one place. So welcome Swarup and Rachna. Shall we unveil the book? On this occasion, let me ask you that what are the 3 or 4 most common questions that you get from investors about mutual funds?
Yeah, Neil, first of all, thank you so much for doing this. It should help mutual fund investors a lot. I mean, just to answer your question, I think the first one is a very obvious one. Typically, we get asked which is the fund that's given the best returns and which is your best fund. And when I ask them, why do you need to know, it comes as a surprise. The second one typically comes nowadays is, markets are at all, should I book some profits? That's the second one. Third one nowadays, and thanks to all of you writing, there's a genuine question, should it be active funds or should it be passives? And within passives, are index better or ETFs better?
Yeah.
But recently, I've seen a lot of people now beginning to ask us, which is the right way to choose a mutual fund? And that's probably the best question that I get now. But out of my 30 years of working, maybe 28 years, I didn't get that. Last 1 or 2 years, I seem to be getting that.
So Rachna, in terms of the resources that NISM has for ordinary investors, because there are all of these courses that are offered by all kinds of people and entities. So I think there's a great need to know what is the correct source of information. So what all does NISM provide?
Yeah, so Neil, NISM is a capacity building initiative of the market regulator SEBI. We offer various kinds of programs, certifications, etc. So to create a cadre of securities market professional, NISM offers long-term programs, residential programs there. NISM has a world-class campus with all the state-of-the-art facilities. So we run full-time residential programs. In addition to that, for market professionals, for those who are employed in the industry and may not be in position to come to the campus for a full-time program, we also offer weekend programs. So there are a couple of certification programs we offer on the weekend in various areas, securities market, as well as in the emerging areas like data sciences, etc. In addition to that, NISM has been offering various e-learning modules for those participants who may not be able to come to the campus, but at the same time would like to benefit from the work which NISM has been doing at their own pace. So there are these e-learning modules, again in various areas in securities market. Then periodically, NISM conducts webinar, again in topics of importance to the investing community. The certifications, which are mandatory requirement for market participants, is something most of us are well aware of. So this is the wide, I would say, bouquet of offerings by NISM.
Yeah, so if I could break it down into 2 questions. One is if you could talk about the program for registered investment advisors, research analysts, people who want to work in PMS.
Yeah.
And then we talk about ordinary investors, how they can use NISM.
Yeah. So NISM has got a specific program. It's a 15 months weekend program offered in hybrid mode, wherein participants can actually come and attend the classes in person, as well as they can join in the classes online. In the sense, the complete program, they can attend the classes online. The classes are offered on weekends, Saturday evenings and Sundays. So all the working professionals or those who are aspiring to make a career in the field of investment advisory or research analysis, they may consider joining this program. In this program, first we lay the foundation, the foundational courses which will prepare them to be a professional in securities market, and then program offers specialization track in portfolio management, research analysis, and investment advisory. It concludes with a dissertation term wherein participant gets the opportunity of applying all what they have learned by taking a real life problem. So that's something, if somebody is serious about making a career in any of these three fields, this is the program they may consider looking at.
And that offers a lot of hope for people who are engineers, doctors, non-finance graduates who want to possibly transition into investment advisory roles.
Precisely. So everything is in this program, we are starting from the scratch and building up to the nuances of these various specialization fields which you have mentioned.
Right. And for the ordinary investor, there is the SEBI Investor Certification Exam, and there's also study material which is available on NISM for free.
Yes. In addition to that, there are various e-learning modules available on NISM's website. And almost on weekly basis, new modules are added. So that is again an area where ordinary investors can look at, depending on what they are actually wanting to know in detail. For example, if they would like to understand fixed income securities in detail, there is an e-learning module available with NISM.
Swarup, if I could ask you to tackle 3 common questions. We've written about it in the book, but I'm sure you get asked this a lot, on all your events across India. So one is, as you say, we write often about active versus passive. What would you say?
So I think the portfolio is more important than the product. And if you want to make the product more important, we are there to become heroes. But it all caters down to the product portfolio, which is catering to your goals or your needs. From that derives your risk-taking ability, and then you derive 2 very important parts, your core part and the satellite part. Core is your solid companies, and the satellite part is aimed at giving a kicker on returns. And from there you derive whether you take an active or a passive. In this era of active categorization, the number of ideas that you get are limited. So I would say the core should be on the active side. But because of the unlimited plethora of ideas that can come on the passive side, the satellite can form very important and brilliant ideas from the passive side. Is a mixture of both would be a better solution than one over the other.
Right. Swarup, one other thing that a lot of people actually have in their portfolios over time is accumulation of lots and lots of schemes. Is there a particular number of schemes that people should have, or a reasonable range that people should have?
I think more than number of schemes, one should like to attempt to own the length and breadth of the market. And if you're going to repeat schemes, it has no meaning. You would rather look at owning separate sides of the market, whether it's the, like I said, the core side can be the larger side, can be the Nifty 50 or the Nifty 100. You can have the mid cap, and now by virtue of the new companies more, or the new kind of categories of industries more on the mid and small side, you can start owning a little bit more of mid and small as per your risk profile. And within that, the passives or the factors can add a little bit of zing to your portfolio. So I would rather look at owning the length and breadth of the market. There's some fantastic themes which are emerging and will continue for the next 10, 20 years. Say, just to give an example, we ran a consumption theme, it's 13, 14 years, and consumption is just getting warmed up in India. But each portfolio on its merit should aim at owning the length and breadth of the market rather than multiple schemes.
One of the big buzzwords is SIP. The amount of SIPs is a talked about thing every month. But people often ask me, SIP or lump sum? So any take on that?
So Neil, the question I missed out is SIP versus lump sum. I have a very simple answer. I mean, people typically ask you when is the best time to buy, and our answer is whenever you have the money. So whenever you have the money, it should be lump sum. Now, typically SIP is a cash flow solution. You don't have enough money, you have that much of money, so you want to participate every month. Please don't convert lump sum to SIPs. That would mean you're timing the market, and you don't have to Google much to know that timing the market is futile. So lump sum has its own place, and SIP is more a cash flow solution than it should never be used to time the market, is my opinion.
Absolutely. All right, folks. So we address these and a whole bunch of other questions. For example, should you invest in the name of your child? When there is a death in the family, how do you transmit those assets to the next member of the family? So do please pick up your copy of the book. You can get it in hard copy format or online. Go through it. Tell us what you think. And thank you so much, Swarup and Rachana, for joining us.
Thank you so much, Neil.
Thank you for having us.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.